is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Day Hour on this last day of the week, last day of the trading month. Whew. Interesting. Dow's down 94 at 25,891. My thinking here is that based on the Chapman wave methodology, yeah, we could have an alternate count G/B. The MACD is still very strong on the daily. Stochastics at 91%. That's very good. On-balance volumes turned down. Relative strength is turned down, still at about 62%. The weekly chart is still very strong. And I'm looking at this and I'm thinking that this bar, this candle right here, leg E, in the weekly chart is going to be absolutely imperative to monitor. Why? Theoretically, on the Chapman wave methodology, wow, I wonder if I can find that. Let me see if I can get to this. Okay. Right here, I've got the concept of the Chapman wave methodology. There it is. Simply identify the lowest low bar and make and count each successively higher peak alphabetically in sequence. You want to get to the fourth highest peak. That's a peak D. So peak A, then comes B, then comes C, then comes D. And it's invariably at D that other things can happen. That's kind of your target. That's your goal, whether it's a 1 minute chart, whether it's a monthly chart. Doesn't matter. It could recycle higher, but there's no letter higher than G. You can go to the G, the seventh highest peak, but you cannot go higher, because if you do go higher, you've recycled, or you have to look back to see if there wasn't a name change. So let me show you what we're looking at here, because this is Technical Friday. It is, I would have to say, it's one of the most important market moments that we've seen in a little while. And here's the reason why. The Dow and the New York Stock Exchange have failed to make new all-time highs. The other indices, most of the other indices have made all-time highs. The key ones have. The one that's really failed that I consider to be absolutely imperative to at least attempt to try to get to 26,616 being the Dow. This is the one that has a very slow build in the weekly chart, quite successful. Stochastics at 90%. Anything over 80% is good. Anything over 90% is really good. And the MACD has been rallying very steadily, very steadily. However, the massive move that occurred when the 26,616 high in January was formed in the weekly chart at a peak E, also Chapman wave 5, suggests quite strongly that the rectangle formation that I've been looking at for quite some time has pierced a 25,800 left side high. That was the high of February. I'm sorry, of March, first week of March, after the February low. And then it went lower down. In April, it went to 22,344, 16 points below the high that was made February, the first week of February. And the Dow was one of the only key indices to make that. So I'm looking at this and I'm saying, you know what? We've had a stair-step move, a very jagged upward move, sharply running to a new recovery high, and then pulling back. Each peak, though, itself has only been a little bit nominally above the previous peak, but the move from the pullback to the new high has been quite substantial. It hasn't been a measured move. They've been expanding from the 23,344 high to the 24,000, I think it was 558 high that was made 3 weeks later. Then it pulls back very sharply, starts a trend line that's been held, starts an upper trend line and expanding cone formation. And that basically said that each higher, only this last high went from the July 27th, week of July 27th, 25,587, to the high that was made just 3 days ago, 26,167. That was one of the biggest moves. So this is what I'm thinking. Somehow or other, because this is B, I could call it a G/B, but look, that can't be. Here we go. If I've made, not me, if the Dow's made a high at 25,692 on the 7th of August in the daily, and then pulls back lower than the trough that was made at 25,120 back in early August, and then August the 15th goes to 24,954, even though the MACD's dipped a little bit, it's still positive, and the stochastic is flattened out, it's turned down a little bit, but it's still at 91%. I think there's going to be some kind of news that says there's a flurry of upside activity, not a major trend change, just a kind of a coda to this daily sequence right now that takes us under the 26,616 all-time high, just above 26,167. I'd say 26,190s to 26,000 G20s. And at that point, we start to see deterioration, where we start to see it in stocks like in Amazon, which is in leg C, peak C, if it doesn't make a new high today, should go to a leg D next week. Google, I'm going to Google, which is Alphabet. This is the C shares fading, but up near the highs. 1273.99 was the all-time high back on the 27th of August. Trading right now at 1220, no big deal, 50 points on a $1,273 stock. You know, I'm looking at this and I'm saying there are some very important stocks that are slowing down a little bit. Cisco making an all-time high again today. This is a brand new move. This is peak A. Yep, A, B, C. This is leg D. I'm getting to the point where I'm saying now we can start looking at potential shorts for this coming week. Not just today, but starting from early next week. And what is the weekly chart? The weekly chart, I don't know if it's recycled, whatever it is. Maybe this is brand new leg C, so that's a good sign. Look, here's it can't be. Call that an A. Yeah, let's do that. Let's be as conservative as possible. Call that an A and a B. This is a C and an F in the weekly. So Cisco at 47.57, up 42 cents, acting very well. What was the other one I was looking at? Cisco. Microsoft, MSFT, here we go. Microsoft, all-time high today, leg G/C in the weekly chart, leg E in the monthly. I'm just looking at these and I'm saying maybe IYT, Transportation Index, made a peak, C1, C2, double top just 4 days ago in the 207s, and now it's trading at 203.36. Pulling back, leg D, possibly a peak D by the end of the day. I'm just looking at this and I'm saying there is so much to hint at the market becoming a little bit tired here that I'm erring on the side of caution now. And we have longs, but I'm about to start looking at implementing shorts. RTH, which is the market vectors, retail ETF, the peak E, nice action today. Hasn't taken out that 110, I can't remember what it was, high that was made just 3 days ago. And the XRT, same thing. XR, I'll do that when we get back. Guys down.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, let me just put autos, XLF, IYT, IYR. All right, I just need to make a note and other questions came in. And Boeing. Okay, so there's a bunch of stuff that I need to get to, but let's go steadily through this all, because at the end of the month, we can start looking at monthly charts as well. I'm just jumping to this because the question that Den, let's see, that said, IBB going to make a double top, Basil, look where monthly is headed. Okay, yeah. So IBB right now is trading 121.84. It hit 122.53 earlier today. We're still long for subscribers. We've taken some profits. We still have a portion left. And I'm considering this just to be a kind of a test of a buy and hold, since we've had it since beginning of July. We've got one that we've had since the beginning of, we've got the dollar since the beginning of April. Trying to get some kind of sense of longer term positioning, and that's what I think is important for subscribers. Now, what's really important about this is the IBB is at 122 just now, is 11 points under the all-time high. It's a split under the July high of 2015 of 133.60. And as I'm looking at it, I'm of the opinion that this is like a rectangle formation with a Chapman Wave inside buy mode that goes to at least a D, where we've gone to an E a second round. We've gone to an E now in the weekly chart. MACD is very strong. Stochastic is good at 81%, not great. Relative strength is very good. And the daily is just very steady. And that's just telling me there are enough stocks, enough indexes to have just another residual flurry of activity into next week to try to make either all-time highs or recovery highs. That's just the way I'm looking at it. Now, within that context, let's go to the S&P. The S&P was at all-time highs 3 days ago. It's pulling back. I can give this an alternate count, but it's either a B or a C or a D. Well, all that I'm saying is that the way it's looking, it seems to me that the S&P has at least one flurry of activity to the upside before it starts to fill in the gap below 2884.69. That was the gap up of the 27th of August. I'm watching this very closely. And it's a leg F at an all-time high in the weekly chart. I could have said this is a recycle. Maybe it's only a brand new F/B with a preference on the B. I can't say that until we have at least 1 week's worth of trading after the leg that goes to F is established, especially if it's at an all-time high. And the monthly chart is still very strong in all the indexes. Now, let's do this. We've got the S&P at 28.95, down 5.76, and all it needs to do is to go to 2916.51 to get to that leg that says, okay, from here we can start seeing whether or not there's going to be a turn down of greater importance. The QQQs, all-time high yesterday, peak C with the doji candle yesterday. I'm expecting that there's one push over 187.52. I don't know if it'll be news, tariff news, whatever news it is. There should be. If it breaks down from the other, it'll be unusual, but it can happen. MACD's good, stochastic's good in the daily, the weekly, and monthly. So let's see how this holds, because key support will be a close under 184.30 in the next 3 days. That'll be a big negative. But so far, holding well. IWM, wait a minute, the IWM Russell 2000 goes to an alternative counter F/B. MACD is good, stochastic's good. See, I don't mind having alternate counts. That's how I developed this whole concept of an alternate count, to say, as long as everything is strong, stick with your most favorable one. As soon as it gets a little bit iffy, be as conservative as you can, because you want to be ready for any sharp pullback. Doji count. A lot of what I'm looking at right now says that, in fact, there should be some kind of a topping pattern based on the weekly charts. But those weekly charts can change. We've seen them before. Perfect doji right now in the weekly chart of the IWM Russell 2000, trading at 172.33, down just 3 cents. But the MACD and stochastic and the daily chart is very strong. Weekly chart is good. It's strongish, more good, but the weekly chart is very good in the MACD. Stochastic saying, hey, watch me, I'm starting to make lower lows, lower highs. So this is something to keep in mind, but so far very good action. All right, so now we're going to go to gold. Now, all the gold bulls that came out over the last few days, I was not a gold bull. I said we're going to buy the GDX, which is the gold miners, start a position there, only because it looked like the dollar was pulling back. Well, the dollar did pull back. It gave a sell mode signal actually in the daily chart, and then it landed up testing key support over the last few days. It didn't drop as much as it should have, and gold didn't rally as much as it should have, and now gold is only up 0.3 at 12.05 in this arch formation. Wow. It needed this week. They can do it next week, but really this was the week to do it, to get to the 12.33, 12.37 area. It's trading at 12.05. Wow, that is just so disappointing. Couldn't take the opportunity to really break the weekly 9-period moving average of 12.27. That's that purple line. And the black one is the 14-period moving average of 12.44. This is on a monthly candle. This is a Chapman wave Roman candle in the monthly. There are a whole bunch of implications with this. I don't have to talk about it today. We'll talk about it early next week. All I can say is I'm going to be watching that candle real closely, because the technicals look terrible in the monthly chart and just kind of very poor in the weekly chart. The daily technicals look quite good, but the price hasn't rallied. And that says to me, with all this going on, you would expect that gold would have been a favored commodity right now, because there is a lot of uncertainty around the world. What this is saying is, we can handle what's going on, at least for now. So silver is down a little bit as well. Silver is down. It's down 0.05 at 14.54. Horrible chart. This is a lousy looking chart in the daily, lousy in the weekly, lousy in the monthly. Wow. Didn't take that opportunity. What can I say? High-grade copper, and then we go to the high-grade copper, very weak today. So we're going to look at the dollar. Why? Because the dollar, we remain long the dollar. We've taken nothing off. I was thinking at 96, and the 96, mid-96s, maybe we'll take something off. And then I thought, as an experiment in money management, we've taken money off other issues so that when it finally reached its ultimate level, we were taking some off, and then when it pulled back, we gave back some gains. So the big gains were made, but the positions we held sort of lost some. And I'm saying in the dollar, a currency trend usually lasts a long time. When I say a long time, I'm talking about either months or years sometimes. So if this is a bigger move in the dollar based on the monthly chart breakout, look at the long move down. If this is a comparable move to the upside, then surprises should be to the benefit of the dollar. And if there is going to be a rally here based on the Chapman wave stalk leg formation, wow, today was going to be the day I talk about it. I don't know if I can. Maybe I'll do it next week. Long leg up, yellow body. This is the oval pattern. The neck, the beak comes down, goes into the body, hasn't broken the low at any point. If it breaks the low of 93.71 in the continuous contract, it's very negative. And then there should be a strong rally. But what happens when the beak is formed, leg, body, neck, beak, when the beak comes down and then starts to move up, if it gives a buy signal in the daily, that can last very powerfully and last a little while. And then you're on your own. You have to use other techniques. Dow's down 86. S&P is down 7. I'll be right back. Basil Chapman, Tiger.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Let me just answer a question because it's pertinent to where we are right now. You see this chart on the right? This is the 120 minutes down with the E-mini ESU18 with the Chapman wave notation. We made a new all-time high in the ESU at 2917.50, and that was a peak E, and then it comes down, goes to trough A, B, C, D, has another arch formation, and then there was that sudden spike into the noon hour, and now it's starting to pull back. There must have been some kind of hint of a bad news for whatever's going on in the negotiations. And all of a sudden, we've gone to a trough F, and that trough F is at the 28.94.25 was the low that I mentioned in my left side, right side price time match as being quite important. We've gone a little lower, but we're above it right now. We went to 28.93 round number low. Most important to the questioner is where should it go? This is key support right now. Why? Because if you look at the 120-minute Dow chart, you see this cluster of support. The last one is at 25.894, and we've just gone down to 25.888. So we went under it. Now we've got to get above it. Otherwise, I would anticipate that there'll be some selling into the close, because there's a lot of angst about what's going on in the negotiations. If that's the case, what I'm going to say is that the next level of support will be, let me just open this out to the bigger picture. Where did I go? 120-minute chart, there it is. And the bigger picture, one of the problems is that we don't really have support until you get, this is a trough would be the next support level. You don't get there until 28.81. So that's 11 points, that's 120 Dow points lower. I'm suspecting we're going to have to see, because the stochastic is at 13%, trying to turn up. The MACD histograms improved just a little bit, but the histogram, the MACD itself is not looking too good. On balance volume is not too good. So this is going to be very important. Why? If there is a sell, if there are sell programs into the close because of nervousness about the long weekend, it's kind of a free fall. So all I can say is if 28.88 is taken out, be careful, because 28.81 would be the next E-mini support level. As it stands right now, this is exactly the area where there should be another bout of attempting to find support. I'd say to subscribers, if at 12.30 the E-mini is -3 or more, it's trading actually -9 right now. I believe I said that's what I said. Let me just go to the den, because I always type it into the den. It's right here with my chart. If I can actually find it. Yeah. So that is saying, easier said than done, because I went offline and then I went back online. I can't find it. Sorry. Yep, there it is. Okay. Chapman, Tiger. Okay. Good morning, Dennis. The daily ESU at 2897.75. That was 5 points higher when I typed that in. Has strong technicals and should try for at least one more higher peak. And that's the daily chart. Peak D. The weekly has extended leg F with good technicals. The 120-minute chart is held above the left side support of 28.94.25 thus far. If by 12.45, that's we've got another 7 minutes to go, VES is rallying to +4s or more, the chances increase that next week sees higher highs. See you at noon. Oh, I guess I didn't do that. I was going to say that if it was -4s or more, that's a problem, and we should see a mixed to negative close. That's what I'm going to say right now. Okay, so those are the levels we're looking at. Just be real careful. It's now 28.91, 28.88 is the next level of support. Otherwise, 28.81. All right, now and do I still expect a lady? Everything about this says we should get another move to the upside, and I'm thinking it won't be that big. If it's just kind of a residual, the waves, the tide is turning. You got your last few waves that didn't see the sign of the beach saying high tide at noon, and at 12:06 they try to go to higher highs. That's kind of what I'm going to be looking at for next week. But definitely, this is the time to start looking at the short side in some of these overextended issues. All right, now I didn't get to this. I want you to talk about it. The dollar at 95.16, up 43 cents. The 120-minute chart, I thought I did it, ABC, ABC. It has 95.22 as 200-period exponential moving average resistance. And that's kind of the target right now. What's really important about this, if we start off the first week of September in this range, then all of a sudden you're looking at the first monthly candle with a lower high with a chance that if the dollar starts to break and at any point in the next week and a half takes out 93 support, then the dollar is kind of done for a while, and it's going to take if you're looking at this in, here we go. Look at the length of time. It's taken over a year. The dollar in, what are we, August? The first week of August, the last 2 weeks of July into the first week of August, we were in the 94 to 93s. We're trading right now 95.16. Taking a whole year to move like a sine wave, going lower, then over, and then under, with the 92.60 area as kind of a midpoint. So at 88.25, the first that was February, the week of the 16th of February of 2018. You've had a really big move up, and now it's consolidating. So let me just make it clear: if at any point in September you're looking at the dollar trading in the 97.50s, 97.50s, that dollar weekly chart is going to strengthen, and it's going to do damage to the other currencies, something that we haven't seen yet in the same degree. If in fact it just chops to the side, remains range bound between the low 96s and the 93s, then that can continue as well. So we remain long the dollar, haven't taken anything off. I might start on this move up. If there is another move up here, I might start to raise the stop on a part of the position, because if it comes back down again, I think it goes even lower. So that's where I am on the dollar. Now let's go to the TLT. I was asked about the TLT in bonds. See, the TLT is in a range. And what I said is I drew this rectangle. You see this rectangle right here? And these rectangles can last a lot longer than your patience. And it's kind of stuck between the 123s and the 116s. The near term is 118 key support and 120. Wow, if it closes above there, 122. Closing the 122 says that yields are going to come down quite a bit. And that would indicate that the market is going to pull back quite a bit. My thinking is that the selling that we've seen since yesterday, where the market looked like it was going to close towards the highs of the day, and then there was that second spree where there were, what, 200 billion or something in tariffs was mentioned, that pullback, I don't think would have happened if it was just a no news day. And that's what I'm saying. We're in a phase right now. This is the reason why I'm getting a little bit more cautious, because I'm looking at this and I'm saying, you know, that the news and the tariffs and politically and everything, we could be in for a bumpy ride. And that bumpy ride might not tank the market, but it could put an upside cap and start to see some of the stocks and indexes that have done really well take a well-earned rest. Basil Chapman, Tiger Conditions Hour.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's go to a couple of things here. Look, the IYT, which is the this is the IYT, is the Dow Transportation ETF. That's a mix of, we've got a whole transportation sector, airlines, rails, truckers. Down 61 at 203.30. So it made this kind of double top at 206.90 and then 206.82. About 4 days later, 5 days later, leg D is actually a peak D today. In the weekly chart, 206.73 was the high that was made back in January the 19th. Drops sharply to the 170s, comes all the way back to 20 right now, 203.46. And 207 was the high that was, what did I say, 207? High is 206.90, goes all the way to 206.90. 206.90 made a higher high. Yeah, so this is now a D. And leg F in the monthly chart, this could easily be a double top. So I'm saying this is where I'm looking at the indices. I'm saying this is the period of most difficulty. Yes, there've been new highs, and they've been made with really singular stocks. Just a handful of stocks have been doing it. There is a broader context that I'm looking at as well, which says, yeah, it's not like only a few stocks are really taking you to the new highs because the advanced decline line, there's a bunch of things going on. But what I am saying is, I'm looking at this and I'm saying, in terms of the technique of the Chapman wave methodology, getting to these peaks right now, watching the MACD and stochastic in the transport start to be negative as the price is close to the highs, is the hint to say, you know what, raising a little bit of cash right now, not a bad thing at all. What are you going to do? So you miss out on a big move up, 300, 400 points up on the Dow, maybe even goes to 26,700. But it is very selective, this move. So I think that there's going to be opportunities. I still say that there are going to be a couple of multi-100-point down moves, single day, maybe 2-day moves down over the coming months, 2 months at least, 3 months, that tell me there'll be opportunities to buy. So don't be in a rush to get fully invested. What I am going to say is use this opportunity. If you have some real good gains, maybe take a little bit off, get that cash ready for real opportunities. Why? Because let's just say you've missed something like Square, like we missed Square. I just missed it by nothing recently, and then it just took off, and I just, there's no way to get in. I mean, it's one of those things, you close your eyes and say, great stock, it's going to the moon, I'm going with it to the moon, and you just grab it. However, leg F, unless it's recycled in the daily, in the weekly, leg F in the weekly unless it's recycled, leg E in the daily. This says to me that yes, the technicals are really good in all time frames. Rather than jumping in right now at 88.84, maybe have two positions. Try to get a position at the 9-period moving average or even the 14-period down at 79. That's 9 points down. Just have patience. Or you can put it in at 82, the 9-period moving average. Start a little position there. And then maybe you could even put one at 79. I think if it takes out 82, it's going to go lower than 79. So stick one in where that peak D was made on the 15th of August at 75.45. I think the Square point of sale, Square Inc. point of sale software to manage receipts. Everywhere I go, I ask the person who's doing it, where they do it by hand and they slide your card. I say, hey, what kind of machine are you using? And almost always they say Square. So I think that this is a company that's viable. I think it's great. Try to just pick it up over there. I might do that in the my newsletter, the opening call. I might just decide, you know what? I'm going to put this in. I know we won't get it now, but at some time, the next 2 months, I'm just going to put it in some crazy number. I'd like to get it, but you know what? When it comes down and hits that crazy number, sometimes if you don't have the number there, you're afraid to do it because why? Hey, if it drops from 89 down to the 75 level, you're going to say, oh my God, this could just keep going down, down, down. It could go to the 73 and 9-period moving average of the weekly, or 69, the 40-period moving average of the weekly. And then you say, no, maybe I won't. But starting having a position when you don't have anything now in something that you think really is viable, that's the way I would do it. And I think that's what I'm going to start looking at for subscribers. We're going to put in some bids, crazy bids, and see if we can get it. And then where do you put your stops? And now let's say you get it at 75 and it still looks ugly. And now the market's tanking everything. And you say, oh, gee, 75, but it could go down to 70. Well, you're not paying 89. You're paying 14 points lower. So now you can widen your stop, or you can say, you know what, I love the stock. I'm going to have it in a small position, my real position, and then you name the position that you would like to buy it at. That's kind of what I'm thinking right now. Square. Next question, XLP. Let's look at the XLP. Well, XLP is the, select consumer. Yeah, made a peak E in the monthly chart in the high 59s, traded down to the 49s, trading right now at 53. Peak D in the daily, leg B, peak B, gray peak B in the weekly. I think it needs more time. That's the 53.65, down 15 cents. We just checked that out. That is the Staples Spider. So the Staples, yep, it needs more time. Maybe that's dollar impacted. I'm not sure. Next question I had is XLI. I haven't looked at that, just pure industrials. Has a different chart formation to the Dow, even though the Dow is called the Dow Industrials. And right now, that monthly chart is looking like it is at 76.92, below the 80 high that was made in January. It isn't quite as strong as the Dow. Look, the MACD is flattening out, but negatively. Stochastic's down at 56. The industrials are saying to me, watch this closely together with United Technologies, which is down $1.20 at 131, taking a real dive from the 136s the other day. Yep, we're still long. I'm watching this. I'm watching this because the industrials with something like a United Technologies, with a Triple M, with a... So here's what I'm looking at. I could say alternate count F/A, alternate count G/B in the daily chart of the XLI, trading at 76.92. Why? Because the major buy signal was here. That was around about the 26th or so of June in the 70, let me give you the exact figure. So it was on the 28th of June at 70.82. Then it goes peak A, B, C, D, rallies up to an E, pulls back sharply, Rallies again. Oh, what was the stock? I even wrote it down. I wrote it down because it was the longest. Dollar Tree, yes. Let me show you something. So you see this pattern. Remember I was talking about the Chapman wave unconventional flat base restart? There's a chance that's exactly what we're looking at right here. And that when XLI has completed its move, it could have one more move to the upside. When it's completed that move, it's going to go down to the 74 level and probably break it. That's the pattern I'm looking at. I'll show you Dollar Tree and I'll show you this amazing move. DLTR, Dollar Tree down.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
What I wanted to say was that Dollar Tree started a move at 37.12 in November of 2012. I'm saying to all those Chapman waivers out there, find me a longer chart in a monthly basis that took almost 6 years to go to a peak D, 5.5 years to go to a peak D. Isn't that incredible? 37.12, peak A right there at 60.19 on the October 13th, pulls back. No peaks to be counted until you get to peak B, March of 2015 at 84.22, pulls back quite sharply, rallies up, no peaks to be seen until August of 2016 and 99.93, pulls back for it's for about a year, and then it rallies from last June at 65 something, and it goes to the last high that was made peaked January of this year at 116.65. So it goes from 37 to 116, and that finally gives you your D. That's the longest one. I know that I've seen whoppers that have been in points, but this one in time and points, that's something. Then, of course, goes to peak F just recently at about 115, trading right now at 79, down yesterday. Huge. The gaps from the 93s down to the 79s, trading right now at 79.93, peak F in the daily. Just a whopper of a down move. Wow. Okay, so that's what I just want to mention, talking about charts. Now, there's a chart that I was looking at, and I can't remember what it is, so I'm just going to say to you, the chart we looked at just a moment ago has the potential, that was the XLI, has the potential to even make a new high next week, but I'm also looking at it and I'm saying the 74s to the 74s would be my target. At 76.92 right now would be my target over the coming weeks if it's got this pattern that I call the unconventional Chapman wave flat base restart. Hey, check out my opening call. Hopefully you'll find it profitable and beneficial. It's my daily newsletter, a very comprehensive look at the markets every day. And I will be back on Tuesday. Have a wonderful Labor Day weekend. And stay tuned for Steve. I think Dave is still away. And then Tom O'Brien wraps it up. Have a great weekend. See you on Tuesday.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.